Have you ever wondered, why did I get a tax bill from the IRS when I haven't even filed a tax return in years? I'll tell you. Hi, I'm Jeff Fouts, a tax attorney located in Metro Atlanta with a nationwide law practice helping clients who have serious IRS problems. So, why did you get a tax bill when you haven't filed a tax return in years? We hear this comment from concerned taxpayers on a regular basis. Let's talk about how this can happen and what some potential solutions might be. Every year the IRS receives information on you. This information may include W-2 earnings, or it may include Form 1099 items such as interest or dividend income, contractor income, self-employed type income, mortgage interest paid, or even the year-end value of retirement accounts. This information is referred to by the IRS as wage and income transcripts. This information is accumulated in your file based upon the Social Security number on the document that the IRS receives. You should have received copies of all the documents sent to the IRS, but perhaps not. Occasionally we discover that income information was sent to the IRS using an incorrect Social Security number, or that the amount on the document itself was incorrect. So in other words, instead of getting a 1099 or W-2 for, let's just make up a number, $50,000, you might get one for $200,000 or $500,000. These mistakes happen all the time. The IRS computer system reviews or scans the information that they receive, and it compares the information that they receive against the tax return that you filed. If the computer finds that a tax return that you filed does not appear to include all the income that they show that's reported on you, the computer issues what's called a CP2000 matching letter. And so what they do basically is they say, hey, this is what we see. Go ahead and tell us if we're wrong, or send us a check for the money. Another scenario is where the IRS system scans and they don't even find a tax return for you at all. And the income that they see reported on you appears to be sufficient that you should have filed a tax return. So what happens? The IRS sends a letter out to you asking that you file a tax return for that particular year. If you fail to file that tax return that they're requesting you file, what happens is the IRS computer system will prepare a tax return for you. And this tax return is not good. It's going to assume lots of things that are going to cause you to pay more than you normally would have. For example, it's going to assume that you're filing this tax return single, for example, or married filing separately. This return is referred to as a substitute for return. Substitute tax returns are prepared strictly on the basis of the wage and income information that the IRS receives. And as I said, this means that the IRS is not going to give you credit for any deductions like itemized things or anything else that you may have had that year. It also means that if you have children, the IRS will not allow you any deductions for the dependents on that tax return they file for you, because the IRS doesn't have any way of knowing whether you can still claim those dependents, whether they still live with you, whether they live with another spouse. So what happens is these substitute tax returns generate the highest possible tax liability for you. And that's bad news, and they need to be dealt with. When the IRS prepares substitute tax returns for you, they issue a notice of deficiency to you, and what that does is that gives you 90 days to respond. And the normal way a lot of people respond is to file an original tax return. If you don't respond to this IRS notice, the IRS will assess post that tax liability to your account once that 90-day period is over, and also they'll begin going through their collection steps. And so what that means is once they reach a certain point, they'll take collection action. That can include wage levies or bank levies. One of the most common scenarios where the IRS creates a substitute tax return for someone involves where you move and don't notify the IRS by either filing a tax return that would show them what your correct mailing address is, or by filing an IRS Form 8822, which is a change of address notice. Since the IRS doesn't see your correct mailing address in the system, you will never receive the IRS notice that says that they're about to file substitute tax returns on you, and that you won't see that you have 90 days, and so you don't respond. So what happens is the 90 days goes by. Now you have a tax liability that you didn't even know about, and then finally, after weeks or months or years, the IRS finally catches up to you and starts collecting against you. And you're shocked. You don't know what in the world's happening. This is like a lightning striking out of the blue sky. So all you know is now they're levying your wages or bank accounts, and they're standing on your doorstep demanding money. And so this can be financially devastating. So it's pretty serious stuff that you need to deal with. If you're a non-filer, you do not need to wait until you get these kind of notices. You need to be working on it now so that you can work on it in a slower manner, in a much less frenzied, scary pace. So anyway, I hope this important video tip has helped you understand the IRS a little bit and about how tax problems are solved. Chances are you have questions or concerns about your own particular tax problem. What I encourage you to do is pick up the phone and call me. I can answer your questions. Over the past 20 years, I've represented clients in all 50 states and in 29 foreign countries, and I welcome your call. You can reach me at the number on this video or by email at jfouts@taxhelpattorney.com. I'm Jeff Fouts, and thanks so much for watching. Have a wonderful day.